everyone, my name is Tim. I'm 37 years old and I am a beginning investor. I am also looking in the next few weeks to be buying my first home, but that will be a different video. In this one, I'm going to be comparing two dividend ETFs that are under $15 per share. That will be ticker symbol PEY and also KBWD. If you enjoy this video, don't forget to hit the like and subscribe button down below. It is greatly appreciated. So the first ETF we're going to be looking at is PEY, the Invesco High Yield Equity Dividend Achievers ETF. For the last year, it does have a loss of negative 20.88%. That's due to the virus going around. But over the last 5 years, it has a growth of 16.48%, and over the last 10 years of 81.93%. It does have an expense ratio of 0.52%. It does pay their dividend monthly at 4.92%, and they right now have an annual dividend payout per share of 72 cents. So their holdings are 26.24% in financials, 21.77% in utilities, 15.13% in consumer defensive, 8.49% in energy, 7.98% in industrials, 6.70% in consumer cyclical, 6.52% in communication, 2.91% in basic materials, 2.52% in healthcare, and 1.84% in technology, and they currently have 51 holdings. This ETF seeks to track the performance of the NASDAQ US Dividend Achievers 50 Index, and this ETF was formed on December 9th, 2004. They have a dividend yield of 4.92%, an annual payout of 72 cents, a 5-year growth rate of 10.45%, and have had dividend growth over the last 3 years. Their typical monthly payout is 6 cents per share per month. For this page, we're looking at if we invested $1,000 in PEY, but nothing further, at a dividend yield at 4.92% and a dividend growth rate of 10.97%. I am 37 years old right now, so if I were to look at how much I would, in theory, get over the next 23 years, not taking into account any dividend cuts or anything along those lines, at the first year, I would get $49 in dividends, bringing the value up to $1,049. At 10 years, I would get $245 in dividends, bringing my total portfolio at that point to $2,197. At 20 years, I would have $4,594 in dividends per year, bringing the total value of that stock at $17,516. And then at the end, when I turned 60, it would be $17,063 per year in dividends, and a total value of this stock in my portfolio of $52,184. Now I'll be looking at the KBWD Invesco KBW High Dividend Yield Financial ETF. It is currently, as of the date of this recording, going for $13.60 per share. It does have a very high expense ratio at 1.58%. They do pay monthly and have a yearly dividend rate right now of $1.46. They have a yield of 10.76%. Right now for the year, they are down 35.32%. For the last 5 years, they are down 40.11%. This ETF has 41 holdings, with 62.58% being in financials, 35.64% being in real estate, and 1.91% being in industrial. This ETF seeks to track the performance of the KBW NASDAQ Financial Sector Dividend Yield Index, and it was formed on November 29th of 2010. It has a dividend yield of 10.76% with an annual payout of $1.46. This is a monthly dividend. It has a 5-year growth rate of negative 2.08% and has no years at this point of dividend growth. They currently pay 12 cents per share per month. For this ETF, we would invest the same $1,000 with no further monthly investment at 10.76% dividend yield at a negative 2.08% dividend growth rate for the next 23 years, reinvesting the dividend back into the stock every month. For the first year, I would have $108 in dividends, and that would bring the total value to $1,108. Then at 10 years, I would have $208 in dividends, bringing the total value of this stock in the portfolio to $2,548. And at 20 years, I would have $368 per year in dividends from this stock, and that added the portfolio would bring that value to $5,474. And at 23 years, when I turn 60, it would be $425 per year in dividends, bringing the total value of the stock to $6,691. Now to backtest this to see exactly how these two would perform well over each other over the last 9 years, and I do say 9 rather than 10 because giving it to 2010, the KBWD stock was only there for a month before the year ended, so it wouldn't be a fair comparison. So this starts beginning of 2011 to the year to date in 2020. Again, investing the initial $1,000, no further investments, no rebalancing, and we'll be reinvesting the dividends. And so we will analyze the portfolios. So for PEY and KBWD, the KBWD would have a final balance of $1,339, and the PEY would have a final balance of $2,430 according to this over the last 10 years. And then you can see these are the annual returns. The blue is PEY and the red is KBWD. And some years PEY was beating KBWD, and then in other ones it's the opposite. And so far in 2015, 2018, and this year in 2020, KBWD has been in pretty bad shape, whereas at least in 2015 PEY did show a growth of 2.37%. And for the dividends for 2011, PEY would have gotten $39 and KBWD would have gotten $121. Then for 2012, PEY would have gotten $49 compared to $99. And then just keeps going there. For dividend rates for each one, it seems like KBWD will beat out PEY for dividends, just they do not have a very good growth. My conclusion from this is I personally would invest in PEY out of these two ETFs that are $15 or less right now. If you enjoyed this video, don't forget to hit the like and subscribe button down below.